U.S.-China Tariff Negotiations Framework Agreement. After 2 days of intensive talks in London, senior U.S. and Chinese officials have agreed on a framework to implement the trade consensus reached last month in Geneva. This framework is designed to reduce tensions and address key issues such as export controls on rare earth elements, which are critical for industries like automotive, aerospace, semiconductors, and Defense 257. The framework is pending approval from Presidents Trump and Xi Jinping. Once endorsed, both sides will move forward with implementation. The U.S. has indicated that restrictions related to rare earth exports could be relaxed if supplies improve. 25. The discussions come after a 34.5% decline in China's exports to the U.S. in May, the steepest drop since February 2020, reflecting ongoing trade tensions and the impact of tariffs. Both sides have accused each other of breaching previous non-tariff pledges, but the latest round of talks has been described as professional, rational, thorough, and open by Chinese officials. 27. U.S. futures. Market reaction. Despite the positive news on a trade framework, U.S. stock futures are trading lower ahead of key inflation data. Dow futures are down 110 points. S&P 500 futures are below the flat line, and NASDAQ futures are down 60 points as of the morning of June 16th. The S&P 500 and NASDAQ had recently posted consecutive gains, buoyed by optimism over trade talks and strong performance from major tech stocks like Tesla 36. Investors remain cautious, awaiting further details on the trade framework and upcoming U.S. inflation figures, which could influence Federal Reserve policy and market sentiment. The U.S. dollar remains under pressure from domestic economic policies, while commodities like Brent crude and gold are trading at $67 per barrel and finding support at lower levels, respectively. Summary U.S. China trade tensions have eased slightly with a new framework agreement, but implementation awaits presidential approval. Meanwhile, U.S. stock futures are cautious ahead of inflation data, reflecting ongoing uncertainty in the markets despite recent gains.